In 1947, 1 US dollar was worth just 4 rupees. Today, you need 87 rupees to get the same dollar. In recent months, the rupee has been under even more pressure as the US dollar strengthens against most global currencies. Hello and welcome to Cut the Noise, where we break down the rupee's decline, its impact on you and where it's headed, while taking a broader look at factors that often go unnoticed. When the rupee weakens against the US dollar, it has a dual impact. Indian exporters win because their products become cheaper for buyers abroad, making them more competitive. But for importers, it's a different story. They now need more rupees to buy the same amount of foreign goods. And here's why that's a problem. India imports way more than it exports. So every time the rupee falls, we end up sending more of our foreign exchange reserves out of the country. Why is the rupee falling now? Recently, the rupee has come under increased pressure due to multiple factors. First, Donald Trump's proposed tariff hikes have sent shockwaves through global markets, affecting major currencies, including the rupee. Then we have foreign institutional investors who've been selling heavily in Indian markets. And add to that, India's widening trade deficit, which is already at $118 billion this year and could grow 18% more than the last year. That's bad news for the rupee, because the more we import, the more dollars we need, pushing the value of the rupee down. Now, to slow down the rupee's fall, the RBI has been selling US dollars in the forex market, using $77 billion from its reserves since September. But now, after multiple interventions and a new governor, the RBI is letting the rupee move more freely with market forces and intervening in extreme volatility. But has this happened before? Interestingly, despite the recent slide, the rupee has remained one of the world's most stable currencies, according to an SBI report. And here's something you might not know. This isn't a new trend. If you look at this chart, you'll see that the rupee has been steadily declining since 1991, the year of liberalization. On average, it depreciates about 3.5% per year. Yes, political events like wars, sanctions, and domestic reforms have caused short-term fluctuations. But from a broader economic perspective, this decline isn't sudden or alarming. It's part of a long-term trend. Now, where is the rupee headed next? In simple terms, the rupee is expected to weaken further, with some reports predicting it could reach rupees 90 per US dollar by the end of 2025. In these uncertain times, investors are turning to the US dollar, which is considered as a safe haven, further strengthening it. And ironically, as Trump's tariff plans turn into policy, inflation in the US will increase. That means the Fed can't cut rates as much as it wants, keeping bond yields up and pushing the dollar index higher. So, while the rupee might see short-term volatility, experts believe it will stabilize in the long run. And as history shows, this isn't the first time and it won't be the last. That's all for today on Cut the Noise. Follow and subscribe to Grip Invest for more market insights.